BlackRock CIO calls this the best investment environment ever but warns of complacency risks. Rick Rieder points to strong earnings, high yields, and unusually low volatility as the foundation of today's favorable climate for investors, while cautioning that risks may be underestimated. Equities remain attractive thanks to record cash on the sidelines, robust buybacks, and strong earnings growth. Fixed income yields between 6.5% to 7% are compelling in a world of sub-3% core inflation. Volatility at historic lows offers investors cheap downside protection, but also risks fueling complacency. Federal Reserve outlook: Rieder expects a September rate cut, potentially up to 100 bps over the next year. Why Rieder is optimistic? Rick Rieder, BlackRock's chief investment officer of global fixed income, told CNBC this week that investors are facing what he called the best investment environment ever. On the equity side, Rieder highlighted extraordinary technical conditions. Trillions still sitting in money market funds waiting to be deployed. Corporations aggressively buying back shares, shrinking supply. Tech sector earnings growth led by the Mag 7 averaging 54% year over year, making stretched valuations more palatable. On the bond side, Rieder underscored that investors can still lock in 6.5% to 7% yields while inflation drifts below 3%. He called that highly attractive even before any Fed easing. The volatility factor. Rieder was particularly struck by today's crazy low levels of volatility, with equity vol trading between 9.5 and 10. This makes hedging strategies unusually cheap, effectively giving investors an escape hatch if conditions deteriorate. But he also flagged complacency as his top concern. With risk insurance this inexpensive, investors may be underestimating hidden risks in areas like credit spreads. Federal Reserve outlook. Rieder argued that Fed tightening has done little to curb inflation, since major corporations are less reliant on credit. Instead, higher rates have hurt housing markets and lower-income households disproportionately, while raising costs for the U.S. government. He expects the Fed to begin cutting rates in September, with the potential for up to 100 basis points of easing over the next year. He dismissed fears of reignited inflation, pointing to rising productivity from data innovation, hyperscale computing, and even space-related technologies, a shift he called once in a generation. Why this matters for crypto. For crypto markets, Rieder's assessment is notable. An environment of lower interest rates, high liquidity, low volatility is exactly the type of backdrop that has historically supported risk-on assets like Bitcoin and Ethereum. If BlackRock CIO is right, the same forces fueling equities could soon spill over into digital assets, accelerating the next wave of institutional inflows.